Hello guys, and I hope that you are all keeping well and safe. Tanzien, and welcome back to another video. Now firstly, if you haven't subscribed, make sure you do now, and for a chance to actually be in our giveaway. And if you haven't seen our giveaway, make sure you follow us on Instagram, and then you can see the post, and the winners will be announced on the 1st, on New Year's Day. So this video is actually a question that was asked a few days ago, and this question was with regards to our bootcamp. Now our bootcamp is only 2 days. Now from what you've probably seen in the smart money concept world of Forex, you'll probably see that bootcamps are probably a couple of days or a week or whatever, and you're probably wondering, how do we teach it in 2 days? Now the main thing is Wickoff. Now this is what the question actually involved. Now this person asked, do we focus on Wickoff at all? And the answer is no, but there's a reason for that. And before I go on to the website, actually, just before this video, someone asked what pairs we focus on. We focus on mainly majors, but this is my watch list anyway, so I keep an eye. If I don't see anything on the majors, I just keep an eye on anything else, just to see if there's anything exciting. Now, if there is, the reason we focus on majors is purely because of spread, because generally we have a 2 to 5 pip stop loss. We sometimes can go less depending on the spread on the pair at the time, but generally it's because of the spread. We want tight spreads because our stop losses are fairly tight. So Wickoff. Now, if you don't know what Wickoff is, I suggest going on to the website. I'll post a link of this in the description below. What you need to understand from this is the 3 laws, which I've highlighted here. Now, this is pretty much all I've taken. Well, I've not taken just this, but what I've actually taken away from this is the understanding of the market, because what you need to know is basically here. Now, with that being said, if you focus on our free content, you could probably, work it out how to actually get a more refined method than I've already shown you for free. But you just need to understand what's actually happening in terms of laws. Now, I'm not saying that Wickoff doesn't work, because we do use Wickoff to an extent, but not how you would probably expect. Because for me, because before I go on, there are so many, there's great Wickoff traders out there who use this perfectly. But for me, it all depends on how you learn and how you understand and interpret things. And for me personally, I don't interpret these things very well. For me, with all these labels and understanding what they are, it's very confusing. And what I've realized is once price actually gets to your point of interest, when you're busy labeling this, I'm still like busy labeling and understanding where what everything is, and the price is already gone, right? And that's just how it was for me. I personally didn't like it, so I went back to the drawing room, and I looked back and I tried to understand what is actually going on with price. Why is it doing this? Because what you need to realize, Wickoff is basically structure, right? It's nothing more. There's nothing special about it. It's just structure. That's all it is with these labels. Now for me, in my head, the labels are a bit of are an accessory. I don't need them. I just need to understand what is happening, where and when. So what we've done at Vertex is we've created a rule-based method to trade using this without using it, if you know what I mean. So our entries are based on Wickoff without using Wickoff at all. We don't label anything because we just have a strict entry system, entry criteria. So we have 2 entry criteria for a buy and 2 entry criteria for a sell, and that's it. Okay, and it's a rule-based method. Okay, and the reason why I prefer a rule-based method is because it allows me to it takes away the confusion that comes with trading. It takes away the doubt. It takes away the emotion that comes with trading, because it's simple. If your rules aren't met, you don't trade, right? It's simple as that. It answers your question whether you're going to take the trade or not. If your trade criteria are met, why shouldn't you take the trade? That's basically how I see it, and that's what we teach at Vertex. So that's why our bootcamp is only 2 days. And not only that, you do get access to our community, which I showed in the last video. So you have that follow-up and you have the videos to go through again by yourself. And we also have the Q&A session, which we'll have in the week after, where we can answer all your questions. But I hope that's answered the question that was asked about Wyckoff and the bootcamp. But going forward, what I can show you is obviously there's different versions of the schematic. So you've got the type 1 and type 2 of each, as in you've got accumulation and the distribution, right? And it's the same thing in terms of what's happening. It is just market structure, and that is what we focus on primarily, right? And now with that being said, now go back at the free content and you can try and work out what we do, to be honest, if you're going to try and learn this. And then if you don't learn that, then you don't really need to join us. But obviously, if you want to join a supportive community and you actually want our personal time and support, then obviously feel free to join us. But the choice is yours. But if I show you what's happening is, for example, Euro USD on the daily is a very good example as what Wickoff actually is. Now, what it does, it allows you to find where the market is actually reversing and what phase you are in the market. Okay, so what we can see here is an accumulation playing out, distribution playing out here, and a reaccumulation playing here, and potentially something here, but I can't read reaccumulation probably in the smaller time frames. But there's accumulations and distributions on every single time frame with respect to the time frame that you're on. Okay, and that's what makes it confusing, because you need to there's Wickoff within Wickoff within Wickoff, right? And that's just basically what is happening, and this is how how you interpret that is completely your choice. And my way of interpreting it is understanding it by rules, right? So, and that's essentially how we focus on it, because what you'll see is obviously, for example, in this position that's going on here, right? So this is a very good example. Actually, this could have been a massive swing. I didn't actually get into this, actually, to be fair. I didn't see it. I remember getting in a quite big long, but I think it was somewhere around here. It was at October time, so it would have been somewhere here. I can't remember where exactly, but essentially accumulation is playing out, right? And what you'll be doing is trying to work out where the spring is, where the ST is, where the AR is, but the price is already gone. And that's what happened to me when I was trying to learn. But essentially, if you're following our rule-based criteria, for example, our entry would, now this is just a daily, so our actual entry won't be here, but POI is there, right? And it reacted perfectly to that POI, and it went and it flew. Where did it go? Let's see how far it actually went. And it went, bloody hell, and it went about 2,000 pips. Now imagine having that with a 2 to 5 pip stop loss. And essentially that's what you can get. So if you're using the daily time frame and refining it, you can get these big moves and just hold it as a swing. But as you see, there's no Wyckoff involved in this at all. All it is focusing on market structure and what's actually happening with price. But anyway, I hope that this has helped, and I hope this answered the question. But for now, I will leave you be, and I'll give you more breakdowns as you guys send in the near future. But obviously, make sure you like and subscribe to the video, and obviously send us a message if there's anything you want us to cover. But for now, take care.